Hi everyone, welcome back to Tax Tutoring and Training. My name's Hannah, and today's lesson is on filing status and how you would classify a taxpayer in the different filing statuses and which one you would choose to get them the best tax benefit in their income tax return. So, as always, there will be guided notes in the description below. Feel free to print them out, fill them in as we're going through the lesson so you can stay engaged, and make sure you look at the activities at the back to get some practice with actually applying the stuff we're learning. So with that, let's get to it. So what is filing status? Filing status is basically a label that impacts the calculation of income tax. It affects the amount of standard deduction and determines the allowance/limitation on certain credits and deductions. So this is basically I use the term bracket as in it will segment you into different allowances of tax. So if you have a certain filing status, you'll have less tax. If you have a different filing status, you might be subject to more taxes than if you had claimed a different filing status, which is why it's really important to determine the best filing status for each taxpayer, because they might qualify for more than one filing status. So, with that, what are the filing status that a taxpayer could be? The five filing statuses include, from best to worst, married filing jointly, qualifying surviving spouse, head of household, single, married filing separately, and married filing separately, which is the worst tax bracket or filing status to choose. Now, first, to classify any taxpayer into one of these statuses, you have to answer the question if they were unmarried or married. Unmarried means that you are legally separated from the spouse under either divorce or a maintenance decree. That means you are not legally married in the eyes of the law. Married is the opposite. So on the last day of the tax year, you are legally married to your spouse. Be a government decree, wedding, litigation, you are married. Or your spouse had died during the year, but you have not remarried. So if your spouse died during the year and you're a taxpayer, you are still considered married in the eyes of tax law if you have not remarried to a different spouse. So, what is single? Single is unmarried, and single is a filing status towards the middle of the pack. So, right, number 4. So it's the second worst filing status you could choose. So when you are unmarried and you don't have any other standards that you meet, you are classified as single and you would file under the single filing status. Now, the reason I say that you could file under the single filing status is that some taxpayers will qualify for more than one filing status. And in this case, you as a VITA intern are responsible for advising them on which is the most beneficial filing status to take up. So we're going to go through the different filing status, and you'll kind of see how they differ, how one benefits, how one doesn't benefit you. And this will help you be educated in helping your client prepare their tax return. So some of the qualifications for being the filing status of single means that you're not married, you're legally separated or divorced, or you're widowed beginning of the tax year and did not remarry. So we talked about how taxpayers with a spouse that died during the tax year are considered married for the tax year. But if your spouse died before the tax year and you still did not remarry, you are considered single. And you will have to file for this status, unless you have some other exceptions, which we'll go over. So the best filing status that we're going to talk about is married filing jointly. And this means that two spouses are combining their income and deducting combined allowable expenses on one single tax return. So that means you're basically taking two people's separate tax returns and combining them into one tax return that they will file together. So in order to be qualified as a married filing jointly status, you have to be married with your spouse, and you can live either together or apart, but you can't be legally separated. You can also be a surviving spouse who did not remarry before the end of the year. So that means your spouse died during the tax year and you did not remarry, which we kind of went over in the definition of being married, hence married filing jointly. Some of the responsibilities of each taxpayer in married filing jointly is that all worldwide income must be included on the joint return. The thing about the filing status of married filing jointly is that essentially what you're doing is combining two tax returns, meaning that all debt is shared by the husband and wife, or the two married people, wife and wife, husband and husband, or that, and all income is shared by them as well. So when you're married filing jointly, you are a joint entity. You combine all debt, you combine all income, you're together. Now, that being said, divorce usually doesn't relieve either spouse of the liability. It just relieves them of the status of married. So usually when you get divorced, you still share that debt. You're just split now, and you're not attached, if that makes sense. So the next best filing status that a taxpayer could qualify for is the qualifying surviving spouse status, which is where taxpayers do not remarry in the year their spouse dies. So we talked about how you're still considered married if your spouse dies within the tax year. Now, if your spouse does die within the tax year, you are able to file as a qualifying surviving spouse for that tax year. And this means that you would be eligible to file a joint return just like you would if you were married filing jointly only for the year the spouse died, regardless of whether you were going to file a joint return that year or not. But if you've had a spouse who died in either of two previous years and have not, if you have a child, stepchild, adopted child, or child dependent, basically, who qualifies as a dependent or would qualify as the deceased spouse's dependent, then you can claim the qualifying surviving spouse's filing status for up to 2 years after the spouse died. So the first year you would claim qualifying surviving spouse filing status because your spouse died that year, and so you're still seen as married filing jointly. And then if you had a dependent child, you would be able to take this status for the next 2 years and still file with the same benefits as a married filing jointly person would. But in order to do this, you have to, as a taxpayer, you have to have paid more than half the cost of keeping up the home for your dependents. And this kind of goes in with the next filing status. But for filing status, we've already talked about the test for what a qualifying dependent is. And if you don't know what that is, please go see my dependents lesson where we go into a lot more depth on what qualifies as a dependent and what doesn't. But for the filing status test, your dependent does not only have to qualify as a dependent, but in order to claim these statuses that have a dependent in them, you need to also provide more than half the support of taking care of the home or the home expenses. So, like we said, in the head of household filing status, which is the next lowest tax bracket, this is the filing status for unmarried individuals, or so single or divorced people, that support a qualifying dependent and cover half of their household expenses. So not only do you have to have a qualifying dependent, but you also have to cover half their household expenses. And some of the other qualifications for filing in the head of household filing status is that you are considered unmarried on the last day of the tax year, you have a qualifying person, and you paid more than half the cost of keeping up the home. Now, in the dependence lesson, we talked about how in order to be a dependent, you have to meet the support test, which is the taxpayer, in order to claim the person as a dependent, the taxpayer had to have paid more than 50% of the cost of support for the dependent. Now, that's a little bit different than the cost of keeping up a home, because the cost of keeping up a home is related strictly to the residence. So rent, mortgage expense, real estate taxes, insurance, that kind of thing. Whereas the cost of support would be would be clothing, shelter, any food both in the home and out of the home, that sort of thing, things you would need to support the dependent. So, a qualifying person for the head of household status. So, we talked about how in the dependence lesson, to be a qualifying dependent, you can either be a qualifying child or a qualifying relative. Now, to be a qualifying person for the head of household status, you need to be either a qualifying child or a qualifying relative that is a little bit different than the dependence definition. So, in order to be a qualifying person for the head of household status, the qualifying relative living with you has to have lived with the taxpayer for more than half the year and has to be blood related or related to the taxpayer in some way. Meaning that even if you could claim a friend who lived with you all year as a qualified dependent on the return, you cannot take the head of household status if it's the same friend living with you. You'd only be able to take the head of household status if it was, say, your mother as your qualifying relative. They'd have to be related to you. Some of the advantages of filing as the head of household status is that you get a higher standard deduction and a lower tax rate than single or married filing separately. And single and married filing separately are our lowest brackets. We talked about single, and right after this, we're going to go into what is married filing separately. But to be considered unmarried for head of household, just to reiterate, that you have to file for the tax year separate from the spouse. So, meaning you're legally completely separated. And you have to have lived apart from your spouse during the entire 6 months of the tax year. So, say you were together. So, say a taxpayer and their spouse were together in September, and they were together up until September. The tax year runs from January to December. So, say they split in September. If they lived together all the way up until September, they wouldn't be able to qualify for head of household if one of them had a kid. One of them wouldn't be able to qualify for head of household if they had a kid because they were together for more than 6 months of the year. They didn't live apart for more than 6 months of the year. And another thing to note for head of household status, like we said with the example where two parents split and had a kid, only one of them could claim the head of household status, but the other could claim the dependent. They're kind of seen as two separate entities, which is a little confusing. And finally, our worst tax status is the married filing separately filing status. And this status involves two married individuals who report their own income and deductions on separate returns, meaning they are married in the eyes of the law, they have a marriage certificate, they just choose to file two separate tax returns, not the joint one where everything's combined and everything's tied to each other. So the qualifications for married filing separately is they must be married, and either they choose to file separate returns on their own or they can't agree to file a joint return. Say one spouse wants to file a joint return and the other cannot agree to file a joint return. They want to file married filing separately. In this case where there's a disagreement, the couple automatically defaults to both married filing separately status. So some of the special rules that come along with married filing separately status is that the tax rate is much higher than if you would have filed married filing jointly. And if you file married filing separately, you can't take the child and dependent care credit or the education credit or some other benefits and credits that you would if you would have married filing jointly. If the taxpayer is married filing separately and one of the spouses itemizes deductions on their return, then the other spouse also must itemize and can't take the standard deduction. We'll go over deductions, itemized and standard in later lessons, but for right now, all you need to know is itemized is kind of like deductions taken on each of like individual expenses, where standard deduction is kind of like a lump sum deduction. So the standard deduction might be $2,000, and the itemized deduction could maybe add up to $500, could maybe add up to $3,000. You'd choose. But and then you choose which one is more beneficial to you. But if you're filing separately, you can only take the itemized deduction. So say the itemized deduction is 500 and the standard deduction is 2,000, you would have to take the 500, only the 500, because you're married filing separately. Now, why would you ever file married filing separately if you're hearing about all these bad things that can happen, and why and why you would just rather file married filing jointly? Well, the reason you would maybe file married filing separately is that it might result in a lower tax in specific situations. One of these examples is if one of the spouses has really high medical expenses that would outweigh the cost of saving if you were to file jointly and combine them. Or another example is if one of the spouses wants to avoid the offset of their refund against the spouse's outstanding debts, so they want to separate their debts in case one of them is like super in debt and the other one wants to maintain good standing, that sort of thing. So, what if the spouse died during the tax year? So, taxpayers whose spouse died during the tax year are considered married for the entire tax year. So, we went over this in the qualifying surviving spouse section. So, this is just to reiterate, they are not considered unmarried until for at least 4 years have passed. So, if the taxpayer had a qualifying child, and their spouse died, they'd be able to take the qualifying surviving spouse status for 3 years, and the 4th year they would default to either head of household, because if they had a qualifying child, or they default to single. And with that, that is our filing status lesson. Please let me know if you have any questions in the comments. I had fun teaching you today. Thanks, and I'll see you again later. Bye.